Hey guys, welcome to Compare Return. On this week's video, we're going to be bringing you the 3 biggest mistakes that expats make when purchasing an investment property and how you can avoid making those mistakes. In this week's interview, we are super lucky to be having a guest which has absolutely dominated the investment property industry for many, many years now. It's somebody who's built an industry and a company from the ground up, and someone who I've got a ton of respect for, and that is Grant Reynolds from IP Global. Now, IP Global have sold more than $3 billion worth of property. That's more than 5,500 units, and they've done it in more than 18 countries around the world. So when he's telling us about the mistakes that people have been made, he sure does know them, and he also knows how to make sure that you can get the best return for your money. So should be a really good episode today, guys. So stay tuned. Thank you so much for joining us today, Grant, and welcome to Compare Return, and thank you very much for your time.
It's great to be with you, Ryan, and yeah, thanks for inviting me on today.
Definitely, mate. I have been familiar with your business for quite a while. It's a company and a structure that I really do admire. So fantastic to be getting you along board to educate us on some of the things, you know, that expats might be doing right or might be doing wrong when it comes to buying an investment property. So do you want to tell us a little bit of background about yourself, mate?
Yeah, for sure. I mean, obviously we've known each other for quite some time, Ryan, but if I share with everyone tuning in, so my background is I've been with IP Global since 2006 when the business was set up. And I've seen us transact over $3 billion of property over many years from where I'm based up in Hong Kong at the head office. We've got 100 employees globally, and we've got a very unique business model. We do everything from the end-to-end process of buying unemotional property in city centres globally. And the key USP of our business is we actually invest our own capital. So it's very unique from that perspective that we're taking the risk, and clients like that because we're aligned with their interest. So whatever they don't buy, by completion, we have to buy ourselves, and that's very unique in the marketplace. Most property companies are purely marketing property, whereas we are actually committing our own capital and taking risk.
Fantastic. So I believe today you're going to walk us through 3 of the biggest mistakes that expats make. And the first mistake is, of course, as you touched on really quickly, is being too emotional about their property purchases or not being able to take the emotion out of it. So do you want to go into a little bit of detail about sort of what that means to you as somebody who runs an investment property company?
Exactly, Ryan. I mean, too often we see people focusing on the aesthetics and looking at, you know, all the picturesque side of a property investment when they should be looking at just the hard data, just like any other financial instrument. So we're very much focused here at IP Global in terms of providing all the high-level data for the client to make an informed decision on buying in property, such as providing all the comparable data on the pricing, making sure that in the area we're investing that there is not too much supply coming on, but tremendous amounts of demand. We're looking at what's going on in the population. Is there population growth? Is there regeneration going on? What's the exit strategy? What's the rental market like? What are the yields like? Can mortgaging get achieved? What's the quality of the developer? So there's lots and lots of information that we're going to provide for the client to make an unemotional, informed decision to make sure they get the very best investment.
So when you're deciding on where to set up a property investment or where to start development, how do you go about that process? You know, like, do you just build anywhere and everywhere, or do you have a set of key criteria that sort of fits the IPG mold?
Essentially, we're not looking at areas that are shiny and bright and everything looks wonderful. We don't want to get in on the other side too early before any sort of regeneration, etc., is happening. But we want to get in at that midpoint where we see specific locations, specific areas evolving and growing and changing and gentrifying and all that sort of stuff that leads to the best property investments. We've seen that globally. I mean, you'll have seen that in key areas back in Australia. I've seen that obviously in the UK. And we're looking always at where's the next area people are moving to. Where's it cheaper to rent, cheaper to buy? You know, what's the population moving to? Where are big employees setting up? And all this is the critical data that has served us well over many years in our business, Ryan.
One of the things I like is that you have the size, definitely, and the ability to invest pretty much anywhere you'd want in the world. So I do know that you've done property developments in Melbourne before. I do know that you've had stuff in North America, you know, all over Europe. So I guess another thing is to look at is, just as a sort of side note, is go with a company that has the ability to look at the global market, because that way, you know, wherever they're building, it's more likely to be in an area which actually has good fundamentals. You're not just building there because it's the only place you can build.
Exactly. And I think the point I would add is, you know, there are so many different places that, yes, there are economic opportunity. For us at IP Global, we just focus on 2 or 3 key markets that we truly understand, that we've spent a lot of time on the ground in. Most importantly, you know, we've got an understanding of these micro locations. We know the developers. We know where people are looking to move to rent and buy. So we basically stick to 2 or 3 key markets that we truly understand and can present the best opportunities for our investors.
Do you guys, if someone wanted to understand how you accruing and acquiring the data, do you have an audit? Do you have a third-party company come in and go over the data with you, or do you have like a book for the company which represents that data?
Yeah, I mean, we can provide a full overview of each of these projects. I mean, we have full financial information, financial spreadsheets. For us, it's all about trying to provide as much information for the client as possible so that they can make an informed decision in terms of investing and give them the confidence to go forward. If I speak to a typical client who has looked at investing before, they say the things that hold them back is just having the time to do the research and due diligence. And obviously we provide all of that. And invest our own capital to give the client confidence, and also not wanting to deal with the hassle factor of buying. And again, that's the great thing about our business, the end-to-end model. So we introduce the clients to lawyers who've done all the due diligence on these opportunities. We have access to mortgage financing. We have our own brokerage. And critically, we do all the lettings and management. So in each of these markets, we have the infrastructure so that clients can rent out their property with full confidence and will never get a phone call from their client, the tenant on the ground. We're going to manage all of that for them. We're going to run their property just like any typical investment. It's going to be hands off for them, and they can just get on with their day job.
You know, I always kind of joke that if you're going to buy an IPG property, you don't even need to know what color the walls are. They will handle everything for you. And so that way there's no emotion. I do believe you guys have done, you know, had companies like Savills come in and audit you and put together books and things like that before in the past. So the data that you guys bring to the table is really strong. You know, if you look at 100 different projects, IPG might only take on board 1 or 2. So I think you guys, that sort of speaks to your success rate. And I think the other thing, which is sort of really briefly touched on too, was mortgaging. And I think the second biggest mistake that expats make when they're buying investment property is not leveraging the property. You know, all too often I see people come to me and say, listen, you know, I've either got hundreds of thousands of dollars in offset accounts to bring the rate of the mortgage down, which is just cash that's sat there doing nothing but lining the bank's pockets. Or on the other side of the spectrum, you know, young people, you know, under 45 who 100% outright own their properties. They're missing out on that magic, which we talk about all the time. We talked about it in the previous video, if you want to go to the link here, which is the magic of compounding and why compounding is so important. So speaking to that from a property perspective, do you want to walk us through quickly, Grant, why it is so important to be mortgaged or leveraged, and what leverage means in regards to buying an investment property?
It just gives a great opportunity to essentially magnify your return. And, you know, I think the thing with confidence is, you know, if the bank's prepared to lend their money, then basically you're buying into a good investment option. And in effect, putting the bank's money with your money added together, you can really, as I say, get a magnified return on that investment.
Yeah, definitely. Mortgaging is quite often some of the cheapest money you'll ever get. So as long as your returns are growing, by more than the interest rate on the mortgage, it's almost always a good idea for a purely investment perspective to be mortgaging.
Yeah, well, the great thing at this moment in time, Ryan, is of course we're living in a world where interest rates are at record lows. So when we're talking about using leveraging, it's a great time to do that. So across our markets, we are getting, believe it or not, in some markets, rates of less than 1%. I mean, we are getting 0.7%. For opportunities in Portugal right now. We're getting mortgage rates in Germany of not far over 1%. So it's a really great time to use that leveraging. And when we're talking about getting decent yields as well, again, these are some of the sort of key components of considering investing in property. And as I say, the outlook, as we all know, is for rates to be relatively low for a period of time. So when I look at my career in IP Global over the last sort of 15 years or so, I've never seen rates as low as they've been now. So again, it's a key component for, why consider property at this moment, just such very, very good interest rates.
Yeah, fantastic. And I think the third thing from my perspective that the expats should be looking at before they buy an investment property is one of the biggest ones, which is hard to gauge until you're really inside the industry and understand how it works. And it's easy to make mistakes in this regard because there's a bit of salesmanship that goes on by some providers, and that is only invest in an investment property company that is also running alongside you, that has their own money within the company themselves, because they're also taking on board risk. And I understand with IPG, with Investment Property Global, if you guys say build a construction development with 100 properties and only say 80 of them sell, you will actually purchase the final 20 properties yourself. So you guys are always at maximum and actually do the whole process yourself. Can you tell us how you differ from some of the potentially competitors or other operators in the industry, and maybe where people can go wrong with buying an investment property?
The key part is, Ryan, is when you're investing your own money, you look at it very differently to if you're not investing any money at all. So, most companies for property are purely marketing on behalf of a developer. They're not putting any capital in. They're not taking any financial risk. So whether they sell or not doesn't make any difference at all. So in other words, you can quite often see inflated property prices. You can see one of my big gripes is sort of seeing inflated yields, yields that are factored into the pricing, that are basically unsubstantiated, etc. And, on our side, how we sort of counter that and how we can gain credibility, as you alluded to, we invest our own capital in each project. Our business is a capital intensive business, so we don't do many projects. We need to be very, very selective on what we do. As you mentioned, whatever we don't sell by completion, we have to buy ourselves. So let's say we've got 5 units in Birmingham left at £200,000. That's a check for £1 million we need to write to the developer if we don't sell that stock. So we're looking at it like a client would. We need to make sure, put bluntly, we provide A1 pricing, that the pricing is very, very good. The clients will do their own research. They'll only buy if it's fair value. So we will only provide the best of the best projects at the outset. And the point I'd make about the rental side is again, we have our own lettings and management business. We manage a tremendous amount of property globally. And these are our own people, essentially. They are our own people on the ground. So what we do is we make sure our own team go to each of these projects before we launch, do the research on the markets, and put together the genuine yields in the financial spreadsheets, so that when the client comes to complete, they know that they are getting a yield that is genuine, that we've correctly sourced, and that we will deliver on, because it's our own people. And we know that if the yield is genuine and the client is happy, the client will invest with us again.
Really good to hear. One of the things that I've found is that if you're with going through somebody who is only handling the marketing side of it, so there's a lot that goes into an investment property. You've got to market the property to be able to sell it. You've got to develop the property so that it gets built. You have to have a letting agency to be able to find tenants to move into the property, or property management. You need lawyers to make sure that everything goes through. Well, we have to have lawyers even if we don't want them, but the lawyers sort of bring all the paperwork together. If you're only dealing with someone who is just a salesman, the likelihood of them turning around and going, oh, well, that's a mortgage problem, so I can't help you out there, or please speak to the lawyers, that's their problem, I can't help you out, or, you know, if the water heater blows, oh, well, you know, all I did is sell you the property, it's not up to me to maintain and manage it. They're very sort of hands-off, and once they've got their commission, they tend to be out the door. Whereas with IPG, you guys do really look at building long-term relationships. How many of your clients who have one property with you do you think have more than one now, given, say, over a 5-year period?
I think it's a relatively high percentage, Ryan. I mean, I've got clients who have bought once because they can only buy once. You know, that's the extent of their budget. I've got clients who've bought 15 to 20 properties over the years, and they've only done that because we've delivered. And I always talk about the fact that buying the property is first base. You know, that is just the start of the journey. When a client invests, then it's up to us to see how we deliver, and therefore whether the client will invest again or not. So the steps are: we introduce the client to the client services team, they outline the process for the client, they hold the client's hand till they complete the legal paperwork. Then we have our mortgage brokerage who can assist the client so they don't have to go bank to bank. We can package all the mortgage up. And again, if we deliver on that, that's another building block to the relationship. And then, of course, we've got the lettings and management side, the critical side. If we find the tenants quickly, if we deal with any issues on the ground, send them a monthly statement, you know, keep them very, very happy, then these are all the building blocks to a very successful relationship and building trust, most importantly. And just to be candid and open, you know, we don't get our funds out until the client has completed on that transaction. So we are genuinely aligned to the client right the way through. Many property companies, once the client has exchanged contracts, that's them done, because in effect, they get paid at that point. But from our perspective, we don't get our monies out till the project is completed. So we are genuinely aligned to helping that client all the way through the buying process, and then thereafter regularly reviewing the progress of that project to ensure that the client is fully updated as to perhaps when there could be a good time to exit their investment.
It sounds like you guys have been doing this for many, many years with a lot of success. So congratulations, Grant, for you know, not only surviving in this industry, but, you know, accelerating and becoming one of the market leaders, mate. You guys are always really, really direct and fantastic to work with. So thank you very much for your time today and for giving us a little bit of background.
No, you're very welcome indeed, Ryan. It's always a pleasure to speak with you. And yeah, look forward to speaking again soon.
Okay, guys, and that was today's episode. So we brought you 3 of the biggest mistakes that expats make and how you can avoid them. So thanks very much to Grant Reynolds from IP Global for coming along and giving us his expertise. So the first mistake is obviously don't get emotional about your investment. It matters less about, you know, what color the walls are or whether it's somewhere you could see yourself living. And it's more important to look at the data, make sure you've got really robust data like IPG do, and make sure you're making the most informed decision. Treat it just like you're buying a stock or a share. The second mistake that people make is not taking out a mortgage, paying 100% cash for the property. It might feel amazing to 100% own the property yourself and put all that cash down and know you've got no obligations, but by doing that, you're missing out on the magic of compounding. So make sure you're leveraging to get yourself the best returns. The third mistake that people make, and this is probably one of the biggest ones, is investing with the wrong company. You know, just giving your money to somebody who's only cares about the marketing and getting a quick commission. You want to be investing with a company which has truly got skin in the game alongside you. As we said before at the start of the video, IPG have been doing it for decades. They've built more than $3 billion with a property. So they've got the size to be able to invest their own capital alongside yours. And that's where a lot of the magic happens. Little giveaway for you. If you look in the link below, you can actually book in for a free 60-minute video or conference call. So if you'd really like to take your investment property to the next level and get your foot on the ladder, we've actually got a Calendly link in the description below, guys. So if you've watched to the end of this video, you're going to get that special prize. So please make sure you click book in and we'll go through your situation one-on-one and show you how you can get on the property ladder. Thanks, guys. Have a good day.